Fed increases key interest rate by 0.75 points again. How will it affect economy and you? Another month, another outsize interest rate hike. The Federal Reserve raised its key short-term rate by 0.75 of a percentage point for a second straight month Wednesday in a bid to corral soaring inflation, matching the largest increase since 1994. It puts the federal funds rate, which is what banks charge each other for overnight loans, at a range of 2.25% to 2.5%, close to the Fed's 2.5% long-run, or neutral rate. That's the rate intended to neither stimulate nor curtail economic growth. In recent months, Fed Chair Powell has said the central bank must move expeditiously to that neutral level and then likely beyond it to cool the economy and bring inflation under control. The big question: will the Fed now dial back the size of its stock market dampening rate increases for the rest of the year? Will the Fed continue to raise rates? Calling it an extraordinarily challenging and uncertain time, Powell said it's too soon to say if the economy will slow enough. The recent hikes have been so large and fast that the economy likely hasn't felt the full impact yet. He said, "We think that demand is moderating." How much is it moderating? We're not sure, he said. We're going to have to watch the data carefully. Yet he noted that now that the Fed's key rate is at its long-run level, at some point, it will be appropriate to slow down the rate increases to assess their impact on the economy. Goldman Sachs and Barclays both expect the central bank to approve a half-point rate increase in September before throttling back to more traditional quarter-point moves in November and December. That would leave the rate at 3.25% to 3.5% at year-end, in line with Fed officials' median forecast. But they say Powell will likely avoid sending strong signals to keep the Fed's options open for a half or three-quarters point move in 6 weeks. With inflation set to fall and mounting signs of economic weakness, we suspect officials will be more cautious raising rates from here, shifting to a half-point move in September, economist Michael Pierce of Capital Economics wrote in a research note.